Welcome to Profit Talks. I'm Mike. Today is Sunday, July 5th, 2026. And today we'll talk about one of the most interesting markets in the recent Polymarket history. The market is US ex-Iran permanent peace. This was one of the most volatile, most exciting, and at the same time most frustrating market that I've ever followed. This is also an extreme case of how a media narrative can shape our perception of how events are playing out. Enjoy! CNN famously said that Trump have promised us a deal 39 times and there is still no deal. This was back in the beginning of June. It perfectly captures what we have here on the market. And I wanted to tell you about it because this is a case of a market that has zero predictive value, but at the same time still has some value. And I need to dive a bit deeper into how those markets really trade. So it's also very informative for you if you're following the markets and want to understand how traders really think about the events that are happening all around us. So essentially, peace markets like US ex-Iran peace deal, or Ukraine peace, or Gaza peace that was last year, they trade on a combination of reality on the ground and news. So on the one hand, we have what's happening in the region during the war, and on the other hand, we have what they are telling us in the media. And this combination is important because, for example, in the Ukraine war, the situation is fairly stable. So there is no side has the real advantage. The front line is pretty much in the same place for a long period of time, and nothing is happening there. So any rumors of a possible peace are really not trustworthy, just because we understand that both sides still have some gaps to bridge, and unless one of them gets some kind of advantage, that will simply not happen. So these markets trade really because they understand what's happening, and that any reporting will need to carry some real weight, some real examples, some official statements, etc., to really move the market. So in that case, the reporting has less value than our understanding of what's happening there. In the case of this market, the situation was completely different because in the beginning of April, we were just after a very intense round of fighting between Iran and the US. The US bombed a lot, Iran bombed a lot as well. They also closed the Strait of Hormuz, and the situation was extremely unstable. When the situation is unstable, we have a case in which any side can get an advantage in a matter of hours. In that case, any negotiation can go extremely quickly. So what traders need to really focus on is not what's happening. They need to, of course, follow it to understand if something can happen soon. But ultimately, what they really need to follow is the news, and they need to try and decipher what the US or government officials are telling us, what is hidden behind the war propaganda. And in that case, the situation was so extreme, so we had such volatility on the ground in Iran, in the Middle East in general, that the reporting was all that really mattered. And as you see here on the market, this is the end of June market that ultimately resolved to yes. The prices went each way, all the way. They started at 59%, went down all the way to 31%, went up 53%, then down to 25%, then up again to 57%, then down to 16.5%, and then ultimately up to 100%. So when I say this market has no predictive value, I say it because the price pretty much oscillates around 50 cents. It goes up when there are rumors, it goes down when there are no rumors, and nothing else really matters. So when However, there is some value in this market because, as I see it, this market is a clear representation, a perfect measure of how the media narrative shaped our understanding of the situation. So because when there is nothing else to trade on but news, then the market stops being predictive and starts representing how effective a current media campaign is in shaping up what we are supposed to think. And as you can see here, each time the market went really low versus the time that we had led, because 31% on May 1st, 2 months out, this means we won't have a deal for quite a few months, because it's 30% for 2 months, so at least 6 months before we get a deal in the baseline. So at this very moment, a campaign is launched, a new rumor appears, and the market goes up again, and goes up only slightly, but then it will take the market another week to reach the same price. So essentially what the rumor did is it changed our understanding of the situation in a way that we feel that the end is closer, when in fact nothing changed. And this had an impact all over the place. It had impact on oil prices, and it had impact on stock market. But these were the effects of the media campaign. What we can see here is the other side. So not the effect per se, but how at what moment a given narrative was being pushed to manage the perception. So in a sense, we had a baseline of what the creators of the media plan, the PR plan of the war had in mind when they said we want to manage expectations of the population. So they had a clear measure. When they thought there's a 25% chance of a deal a month and a half out, it was too low, and they needed to launch a new campaign to shape those feelings and to push them higher. And this is extremely important because I believe we will have many more markets like that, just because there are so many things happening. They're extremely volatile. They will have effects all over the place, and so much will happen that there simply won't even be time to properly analyze it. So in that sense, we will have plenty of markets like that don't trade on really anything else but the vibes, so what we have in the news. And it's important to understand that while they have no predictive value, they have value in giving us information on how the government wants us to understand the situation that is a bit murky. So I think this is even more important in the current context that we have. So I will be watching those markets. I also understand that there's probably no alpha in trading them at all, no plus EV, at least from my perspective. But these are extremely informative markets when it comes to our understanding of the world. And that's all for today. As I said before, if you want to dive deeper into the topic of this market and what I think about what's happened on them and what it means for prediction markets and understanding of the world in general, go on profitknows.com. I have a big article on it where I explore more implications. Also, if you like the video, give the thumbs up button, click that subscribe button if you still didn't. It will help spread prediction market analysis and ultimately understanding the world better. Thank you for watching, and see you next week for the next round of Profit Talks.